Welcome back to Bunnex Investment Group. In this video, we are going to talk about the M15 golden entry strategy. If you're new to this channel, please make sure you subscribe so that you won't miss any new videos that we upload. Alright, basically the easiest way to trade is to look for the same repeating A++ easy money trading setups. I see a lot of people actually trying to get an entry each and every day, or each and every hour, or each and every session, but that is the wrong way to make it in this business. However, this does not always flash every day. So we are saying A+ setups does not flash every day. These are sacred setups that comes probably once or twice or thrice a week. And the market makers knows that if you keep waiting, you will definitely do something stupid. So if you look at a big sample of traders, you'd find out that they are not making money, not because they do not have a working strategy, but they actually lack patience. Patience is something that is easier said than done. A lot of people would say, I am patient enough to make it in forex trading, but they are not. So in this video, I'm going to give you a simple setup that is not 100%, but 65 to 75% accurate, but you need the following to make it work. So watch the following slide and actually take it to heart so that you'll be able to see results in your trading. All right, basically I am saying cleanse yourself. Clean yourself so that you can make money in trading. Don't be a trader that make a plan and fail to stick to it. If you do this, make a plan and fail to stick to it, you're basically lying to yourself. You need to be disciplined. Discipline is always difficult, but what you build with discipline will always give you some results. Take trades that do have a statistical advantage. So we are saying sometimes when you get frustrated, actually when patience runs out, you start to take trades randomly. And cleanse yourself and to stop engaging in random, impulsive, and emotional gambling behaviors. You've come out of Instagram and you've seen blue screens whereby a trader has displayed 50 trades with 5 standard lots and all of them making some profits, and you come and take in that take trades using that emotional gambling behavior. You definitely lose. All right, so basically this is what you need to do for you to see this following strategy work for you. If you are still engaging in these particular things, you need to drop them off. All right, so basically the M15 golden entry pairs is the first thing that I'm going to show you. This strategy basically utilizes the Asian session to anticipate moves in the London session as well as the New York session. So we're saying you are going to be trading in the London session as well as the New York session if the setup appears. We'll use pairs that are active during the Asian session, and those pairs are Australian dollar, Japanese yen, and New Zealand dollar. So these are the pairs that you'll be actually trading from. So we are saying all pairs that consist of these currencies are valid for you to trade. Basically, if you are trading the M15 golden entry strategy, you are going to require pairs that have these currencies. Alright, here's the strategy definition. I've tried by all means to simplify it so that anyone can understand as well as execute it. Time frame of observation is going to be M15. From the name of the strategy, you can actually tell. With this, you are going to be looking for 1350 EMA cross. These are exponential moving averages applied to close with period 13 and another one with period 50. They need to cross over within the Asian session, not any other session, but within the Asian session. This gives you a bias of the London session. So we are saying if 13 crosses 50 in the Asian to the upside, we are expecting that the London session will give us an upward bias, or the US session will give us an upward bias, and the vice versa is true. When 13 crosses 50 to the downside, we expect the London session to give us a downward bias like that. So in the London session, you are going to look for an M15 an M15 50 EMA trap, right? What is a trap? This is going to be your entry, and I am going to discuss and explain it fully on the charts. So the 50 EMA trap setup is the golden point for you to make an entry. So we are saying this is the illustration, this is the Asian session, and the 50 is the one in blue, and the 13 is the one in red. And when they cross over, the next thing is now for you to wait for a 50 EMA trap, which I'll show you shortly. So I'll actually let you know how to enter on the charts. But before we dive right on the charts, check out our emotionless, consistent expert advisor or trading robot called the Stophunter EA. This robot took a deposit of $1,000 to $500,000 in 5 years. I've left the link in the description box below. It's actually going for 249 once off payment. It's actually once off payment, and if you fail to make money with this robot for a specified period of time, we will actually refund you back your money. Alright, so basically what you are seeing on my charts is a template which you can obtain for free. On this template, it marks the Asian session, which is the one in blue. It is the EMAs, which are these EMAs, but the ones that we are going to be looking at is the red and the 50 in blue, right? The red being the 13, the 50 in blue. So what we want is to basically see a crossover of the 13, 50 within the Asian session. So here we can see that there was this crossover of the 50, 13 in the Asian session, which occurred here. The Asian session ended at this particular point, and the London session started at this particular zone, which has a gray box. So what we call a trap below 50 or a 50 EMA trap is basically existence of candle bodies below or above the 50 EMA. So here we had a push to the upside, and when the London started, we can see that the market got us or gave us some bodies of the candlesticks below the 50, and when the candle closes above the 50 after coming from below the 50, that is where we make our entry. So our entry was going to be at this particular closing price of this candle, right? Let's have another example. We can see here we had another crossover, which I can highlight so that it will be clear. We can see this one was a crossover. Then within the London, at the first gray box, we can see there was a trap above the 50, candles existing above the 50 EMA, and then closure of this candle below the 50, and we can see the market actually went to the downside like that. Then here, if we proceed, we had this particular scenario which is important for us to know and look at. We can see that here we had a crossover of the 1350, but what happened within the London session? We can see that there was no longer a bias that we have obtained within the Asian session. So basically that is what you will be actually looking for. You will be actually looking for crossovers of the EMA. So there are other scenarios whereby we call it a pin to the 50. It's basically a move that actually has a trap of the lower time frames. There were M15 or M5 or M1 candles below the 50 at this particular point after this bias was issued, a crossover to the upside outside the Asian, and then we come to trap of the 50, and then we got right like that. So basically that is how you'll be actually doing. If you want to understand how to take trades properly using the 50 EMA clearly and in a simpler way, please make sure you become part of the top 1% traders course. I'll leave the link in the description box below. On that note, I'll see you in the next one.